so I'm just going to quickly introduce myself. I'm Teresa Fuller, team lead of the Teresa Fuller team at Compass. Our moderator is Corey Cooperrider, Vice President of Operations of the Teresa Fuller team at Compass. I want to really thank Hratch and Armen Ghazarian of Allied Public Adjusters for joining us to help educate us about the role of public adjusters. And I've got about 14 questions that were sent to us by people who are participating here. And so, if you guys don't mind, we'll go through some of those questions and then, give you if you'd like to do sort of a brief introduction, I can tell you our first question is pretty simple. It's please explain the role of a public adjuster and how they are paid. So that should be an easy kickoff.
Yeah. So, hello, everyone. The role of a licensed public adjuster is to represent the interests of the policyholder. So the insurance company has its team of adjusters, whether they be company adjusters or outside independent adjusters that work for them to assist in evaluating a loss and assigning a value to it. The state's answer to trying to level the playing field, if you will, is the public insurance adjusting profession. Our license extends only to representing your interests, the interests of the policyholder in the claim process.
That's a wonderful answer. And, I didn't even, my introduction was so lackluster. Can you please, I know you guys have been in the business for many, many years and you've represented many, many fire claims. Could you just tell us a little bit about that? And I apologize I'm on my phone. And so I'm just struggling a little bit with my own technology and it's handicapping me a little.
So what is the question exactly?
Can you just talk about your experience quickly? I know you've been in the business for many, many years.
I have.
And, will you tell us about your experience with fire claims?
Yeah. So when fire, I'll speak specifically to wildfire losses. Okay. Instead
Thank you.
Kind of one-offs. So when there are wildfires like this, our team, when I started the firm, our forte, our specialty is more complex claims. And now, but we've also handled many wildfire claims, usually after the fact, after the insurance company has already come out, determined what they feel they owed, and there's some form of a dispute. So when there are wildfire losses like this, it's very important that you be on alert that to the extent you're considering retaining a public insurance adjuster, making certain that they are qualified, local, they have a footing, if you will, in the community, because it does not take a whole lot for someone to get a public insurance adjuster's license. And for that reason, because the bar is so low, there's a lot of riffraff. So there's a lot of underqualified public insurance adjusters out there. There are some good ones, but there are more unqualified ones that are just in there to grab the low-hanging fruit and run. So with wildfires, it's important to understand your options. So we've literally gotten hundreds of phone calls because of this incident. And really, I pride myself on our team educating, as I'm doing now with you all, educating you on your options. You don't have to rush to hire anyone. Your insurance company owes you a good faith investigation. They're supposed to come out with a positive attitude and look for coverage and investigate coverage. And coverage, this is the most basic type of loss, these fires. Coverage should be a non-issue if you have property damage insurance for a loss like this. Insurance company has a duty to come out and determine what they believe is they owe you under the policy. And once they make that determination, write you a check and then provide the information, the reports, the valuation that they relied upon to establish that number. So just know you don't have to rush and hire anyone. That said, after you receive that, what we call it, they call that an undisputed settlement, because there are fair claims regulations that govern how an insurance company must handle an insurance claim. And one of those regulations speak to this very thing. Once they determine a value, they must issue that payment immediately, but in no event more than 30 days in the state of California after that value is determined. So when you receive that payment and you receive the paperwork that supports their loss adjustment, then at that point, a qualified public adjuster, like our firm, can audit their adjustment for you and determine if in fact their adjustment is proper and complete. And if not, then at that point, and you can cash the check that the insurance companies write to you. You're not waiving any of your rights on a first party claim by doing that. Again, they're required to pay you that amount. But then a qualified public adjuster under this option, let's say, of handling your claim, can look at that settlement and determine, yes, this is fair and reasonable, or no, they missed the boat. And then at that point, you can engage the public adjuster, and any percentage that he, she, or it may charge you will be based on only new money paid after the date of the assignment. So whatever monies you received on your own, they should not be charging you any fee for those monies, only on any.
That's really an interesting point. I mean, I really appreciate that point. So only on the additional monies gleaned.
Right, because what they do, and calling these, I'm going to use the phrase ambulance chasers, because you're going to see just public adjusters coming from different states to come here to address and conduct business with this disaster that we're experiencing here in Southern California. Is a lot of them are doormen. They open the door for the insurance company, who's going to pay something anyway. And to them, they don't do a whole lot of work. They just collect what's otherwise an undisputed amount, an amount you would have likely gotten on your own anyway. And then they grab that low-hanging fruit and they move on to the next one. That is a disservice to the public. And a lot of these firms, that's exactly what they do. So one of the benefits of approaching your respective claims, and by the way, I'm sorry for all of your losses. One way to do this, to ensure that you know you're getting something by hiring a public adjuster, is give your insurance company an opportunity first. Then you know what you're getting. A lot of these public adjusters that want the low-hanging fruit, they're going to run for the hills. They're going to be done. They're not even going to be interested in handling your claim, because they just want a small percentage of that first check, and they're moving on. So
that's super. That just feels like super good advice. One thing that we've heard over and over just out in the rumor mill is that if your home is a total loss, it should be very straightforward and you might not need a public adjuster. Could you speak to that?
yeah, certainly. There is truth to that, depending on the value of your loss versus the value of the policy. Usually the issues that arise from that is that they don't properly value your loss, the insurance company. So again, if you have a constructive total loss, now we have a 28-year history, and so we have clients who insist on having us involved from the beginning. But usually we make sure they understand all of their options, and that is go on your own first. That the first option I've already explained. I won't repeat myself. And then again, it should be, it's really paperwork. They have they underwrote your policy, right? They determined in most cases, the insurance company, what they believe it would cost to reconstruct your home. And so in theory, they should be writing you a check, and it should be really easy peasy, not a whole lot of complexity to it. Again, if you have a constructive total loss, an option is to just, they're going to issue advance payments. Let them issue the advance payments and encourage them to come out, the insurance company, and adjust your claim. And then thereafter, you can, you're not waiving any of your rights. I'm going to be a little redundant because you don't do this every day. You're not waiving any of your rights. You give them an opportunity to do the right thing. And it should be a simple, straightforward process.
Could you describe the difference between those homeowners who might choose to accept a check and not rebuild versus homeowners that want to rebuild? Can you talk us through those differences?
Sure. So that's called off-premises replacement. So your insurance company, under most policies, I'll speak generally, owe to pay you what the actual cash value of your loss is at the time of loss. So it's kind of like, I'll give an example of the Blue Book value. Okay. It's people that you, God forbid, you get into a car accident, you total your car. They don't pay you what it costs to replace a new car first. Well, they pay you a fair rental value, or a Blue Book value, which is the cost of your car minus the replacement minus depreciation based on the age, wear and tear. So what they owe you, with, even if you have let me decline, someone's trying to reach out to me here. Even if they, what they pay you is that actual, what we call an actual cash value settlement. If you have a replacement cost policy, then you have an endorsement that provides that they will pay you the depreciation. In other words, it's recoverable, that depreciation, after you show that you replaced your home. In the event you choose, to answer your question now, Teresa, more directly, if you can either choose to rebuild your existing home, or you can choose to replace it with a new one that's already built. That's called off-premises replacement. Under most all policies, that is an option. And so if you choose to do that, you're not going to have to deal with the construction. And right now, it's way too soon, but we don't know what kind of infrastructure damage there is. We don't know what kind of contamination there is in the soil. There's a lot of information that the authorities in the city, that the county, that they need to figure out before you're going to be in a position to rebuild. And if you're dealing with, like, the coastal properties, you're dealing with coastal commission. So the time it's going to take to rebuild, it's the conceptual phase, if you will, the construction, the rebuild. It could be, realistically, it could be over a year before you even are in a position to rebuild anything. So that's what off-premises replacement is. And if you do that, you can make claim for that recoverable depreciation if you replace your home with like, kind, and quality at the same value.
So just in layman's terms, if I want to rebuild my home, and my home, I redid my kitchen 25 years ago, they're going to value that kitchen less. And so my replacement dollars are going to be less because of my 25-year-old kitchen. If I go buy a new home with a new kitchen, I'm going to get my you're saying the depreciation is recoverable? Does that mean I get to buy a new kitchen if I do the off-premises replacement? I'm not trying to be silly, but it's a little complex.
It's not as complex as maybe I didn't explain it in simple terms. Let me explain it this way. If you have a replacement cost policy, whether you rebuild it or you do off-premises replacement, you are entitled to that full replacement cost value. It's just you're not, if you buy a house that's ready, you're not
Got
going to
it.
have to go through the exercise of rebuilding and everything before you see that recoverable depreciation.
Do most policies have the 25% lift above the replacement cost number on the paper?
Yeah, what you're talking about is extended replacement cost coverage. Some policies have double of what what we call the face amount of the policy is. So if you look at your respective declarations pages, which is the summary page of your coverages, you'll see, let's say, I'm going to just pull a number out of the air, $1 million. $1 million is your dwelling coverage. Well, there are other coverages like the extended replacement cost. If the extended replacement cost covered, it'll specify that on the declarations page. Is it 25%? Is it 50%? Is it 100%? That's the amount that they will pay above that face amount of the policy when it comes to reconstructing. Now, the caveat in that is most policies that extended replacement cost is a reimbursable coverage. So it's only paid when it's incurred. So you'd have to go through the construction to show that the cost of construction exceeded that face amount of the policy. Or you just simply, if you buy a property that's of equal or greater value, then that too can be adjusted to get that extended replacement cost value out of it.
That's super interesting. What kinds of things do non-experts miss when they negotiate on their own behalf?
Sure. There's so many creative ways of adjusting a loss. Some of the things that can be missed is if you're staying with family, there's a value for you staying with a family member or a friend. The insurance companies are going to apply every single limitation they can as provided for by the policy. And my attitude with that is I encourage it. Go ahead, insurance company, apply all the limitations you can, the deductible, the depreciation, all of that. The flip side of that, however, is they don't get to show you the policy when it works to their benefit and then dismiss that policy when they want to try to save money by not sharing something. If you stay with family, this is just one example, the insurance company cannot don't allow the insurance company to benefit off of the relationship you have with that family member. If you don't stay with that family member, and if you have the coverage for loss of use, then there's a value to it. So determine a reasonable value for staying with family and friends, and that the insurance company would owe you for.
Got it.
That's a big deal. Now, always be upfront and transparent with an insurance company. You never, ever want to make a misrepresentation to an insurance company, both for ethical reasons and also for contractual reasons. Because if you make any misrepresentation, you give them an escape hatch on the claim at large to pay nothing. So always be honest, be transparent, be strategic, but always with truth. And if you look at our website, I'm big with truth. Truth is relentless, and make sure that you don't deviate from that and put yourself and your claim at risk.
Could you give an example of that?
Of what?
Like a misrepresentation?
Sure. I'm making a misrepresentation. Now, I don't, everyone's situation is a little different here, right? With this fire. If it's a total loss and your house is not habitable, that's a problem. That you're not going to be able to, you're not going to be able to stay at home. A lot of people we find will tell them they're staying somewhere else, but they're really staying at home. And so they'll submit lease agreements, but they really haven't truly leased a property. I mean, it's very silly, some of the things that we see. You're staying with family, disclose to them it's family. Some people think, I don't want to disclose that it's family. Maybe the insurance company won't pay if it's a family member. So they make a misrepresentation that I rented the whole house, and they're not sharing the house with me. Just go at them with the truth. So that's a big one, that, believe it or not, that where they're staying and the value the value that they're paying. If you tell them I'm staying with a family and I'm paying them $20,000 a month, okay, if that's the representation, you better be paying them $20,000 a month, and that better be a reasonable value. So that's, you get into that. Also, your what efforts that you've made with remodeling and so forth. Don't just be straight with them. You know, this is what this replacement cost policy, it's a very, very high standard that comes with a replacement cost policy. A standard that I've seen even judges don't understand if something goes all the way through court. And I've testified both in criminal court, I've testified in civil court, and it's really mind-boggling, the very high standard of replacement cost policy. The promise of a replacement cost policy is we will give you, in the event of a loss, we will give you new for old. So if you're making, and I'm deviating a little, but this is an important fact from the question you asked. If you have an old suit from, most of you all look young, but if you had a suit, let's say from 1978, that's just hanging in there and it's an old suit, in the insurance arena, and then you're putting an inventory together of your lost items, you say, that's an old suit, I'm not going to include it. Include it. Because remember, they owe you new for old. So they get to apply depreciation, but it's recoverable. So that suit, while it may be, in your mind, the value of it is $50, and today's market, the replacement cost value of it may be $1,000, $2,000. So make sure that if you put an inventory together, inventory everything. I deviated from the question, but that was an important fact.
I thought you had a very good answer. I mean, it's just very clear. Don't fake it. Don't fake it.
The truth will set you free.
I love it. The truth will get you paid, right? I know there are a lot of people whose homes are in the fire zone. You know, every house behind them burned, but theirs did not.
Right.
And are homes in the fire zone that have no structural damage eligible for large claims for smoke remediation and cleanup?
Absolutely, yes. And the damage, if your home, I'll give you an example, and this is in the Northern California wildfires years ago. We had a client who they had the only standing home, and I guess all the surrounding homes had burned down, and we were dealing with Safeco Insurance on that particular case, and it would have been easier for them, frankly, and from an adjusting standpoint. I'm not trying to be insensitive at all, just strictly from an adjusting standpoint, if it had burned, because you have heat damage. When you're close to the fire and you have heat, imagine your windows and doors, all the seals on them could be compromised. So that's heat damage. It's not readily visible, especially if you don't have a trained eye to see it, but you have heat damage, you have that smoke residue when it gets into the the living space or into the duct space, into the duct system. It can be significant. There's toxic, it could be toxic smoke particulates that you have in there. So it's imperative when we deal with smoke losses like that, it's like trying to build a house without an architect and building plans. You need to do proper testing, a forensic testing, smoke testing by a qualified environmental expert. To do a thorough forensic investigation needs to be done to determine the extent, if any, of smoke contamination. And what I tell people all the time is, I hope we don't find it, but we need to look. The insurance company owes you that thorough investigation, but unfortunately, too many times they don't do any testing, smoke testing, or they do representative testing, and they'll go, now you've moved into the house, you've moved into the property, you've done some cleaning, and they'll go and take a tabletop that's been cleaned 10 times since the fire, and they'll use that as a representative sampling of the contamination in your home. That's not a good representative sampling of contamination in your home, right? So you want to have a very thorough and qualified testing performed so that you can get a true snapshot and true idea of what the extent of your contamination is. And then if there is smoke contamination inside the property, then a remedial protocol, a decontamination protocol should be, there's your map, there's your building plan, right? With the analogy I used, put together an action plan by this qualified consultant. These are the steps that need to be taken to fully decontaminate this home. And sometimes the ducting all has to come out. Sometimes drywall has to come out in order to gain access to maybe insulation that was impacted in the walls, certainly in the ceilings. And so that testing will define the scope of the coverage claim, what's required in order to restore your property. So usually the issues that we identify later on when we're brought in a year after the loss has occurred and there's this dispute that the insurance company and the policyholder just can't get, that seem to be at an impasse on, is a lack of proper investigation and testing on these fires. So insist on having testing done before you allow your families to move back into any living space.
I know it's very interesting. We've already heard from a client who's had the company adjuster on site in Altadena, and they have an architectural home, and they have been told that in order to assess the damage, they have to go down to the studs. And they question that, but it sounds like what you're saying is that's absolutely true.
Right, and it's important to understand who's saying that. Is it a contractor that the insurance company sent out who's just trying to, again, the truth is the truth, right? So we want a thorough inspection, a thorough investigation, but I don't want to remove something that doesn't need to be removed. So if someone is saying that it needs to be gutted basically down to the studs, I'd want to know what the qualifications of that person is. So
Got it.
It's not just about getting as aggressive as you can. It's about getting sound advice, because in this industry, too many experts don't stay in their respective lanes. You have contractors that are talking, like restoration contractors, that are pretending to be environmental experts. You have insurance adjusters. Most insurance adjusters cannot write a qualified estimate, but most of these claims will be settled based on an adjuster's unqualified estimate. So make sure that the information you're getting is from the appropriately qualified professional.
Should we always hire our own inspector in that case?
When you say your own inspector,
Testing provider.
you don't know. Well, in that scenario, the example I gave was a contractor acting as if he or she was a qualified environmental expert. If it were me, absolutely, I would bring in, to answer your question, I would bring in my own qualified environmental expert to do the testing. And that you can justify. An insurance company may give you a hard time and tell you, no, 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 you can hire whoever you want, but we're not paying that. And I say, bogus. That is a mitigation expense. You can argue that you're doing this in the spirit of mitigation, because you don't want to remove anything you don't need to remove, but you are bringing someone that you're engaging someone as part of your mitigation effort. Use that argument.
I love that. I love that language. Thank you for giving us that.
Sure.
One question that we've gotten over and over is, if my home is still standing and no one is going to scrape my lot, how do I make sure that my lot is not toxic? That, all the embers and ash and, is there the person who submitted this question, I love this. Is there a mini scrape? Do they go 6 inches down instead of further? How do we make our yards safe for our kids and pets?
Sure. You start with the environmental testing. And when you contact a qualified environmental testing company, raise that question. That's more of a soils issue. So it'd probably be, it's a mix, right? It's an environmental issue that with the soil. So I would bring the qualified environmental expert that you bring in should be able to address that and bring in the appropriately to the extent they need a soil engineer to come out as well, because different, the composition of the soil is different from site to site. So let them make that call, but you make sure and make a record that this is an issue that you need addressed. Now, an insurance company may tell you, and it's true, they don't cover earth. Land is not a covered cause of loss. Okay, I'm not making claim for you to restore the earth. I'm making claim for you to remove the toxins that emanated from this covered fire loss. So a lot of it is, if they come back and tell you we don't cover earth, we're not making claim for the earth. We're making claim for the toxins that continue to pose a risk to the property.
So basically, this is all positioning. I mean, we do this in real estate too, of course. And I love this. Thank you. I mean, this is such an education. It's great. You are both really appreciated. And somebody asked if the loss of use limits are hard capped. We're seeing a lot of 12 months, 24 months. What happens if it takes 3 years to rebuild?
Yeah, because this is a state catastrophe. It's been declared a state catastrophe. That will extend, I think, by 1 year. So we have to check and see with the state, but typically it'll extend. The dollar limits don't, but the time period does. So a lot of these policies don't have a dollar limit; they just have a time limit. So that time easily extends.
Awesome. And then someone just texted me this question. Does mortgage forbearance, is that something that insurance adjusters negotiate, or is that something different? I'm guessing no, but it's an interesting question.
That's something and remember I talked about staying in the lane.
Yes.
Yeah, so the adjusters should stay in their lane. Now that's an issue. That's something that can be directly addressed with. Now my firm has a loss draft department, and so that my accounting staff, and they're very, very good at this. All they do is deal with mortgage companies, and sometimes, frankly, the mortgage companies are more difficult to deal with than the insurance companies. but that's a better question for me to pose to them. We have in-house attorneys here, so typically when something comes up with the mortgage company, they will look at it and then they will provide a recommendation for an outside attorney if appropriate. And sometimes realtors we've had do it. So that's something I
Sure.
can get back to you on.
Teresa,
Okay, go ahead, Corey.
I have a lot of questions in the chat. Can I
Yes, do it.
time to ask a couple of those?
Do it.
Great. One question, if you could help our folks understand the difference between a public adjuster's role and an attorney, because we are hearing people say, oh, you're going to need an attorney.
Yeah. All right. I have a strong opinion on that. I have a great deal of respect for the legal profession, and I believe attorneys belong in the arena of litigation. This is not litigation. A good public insurance adjuster is an expert in valuation. What you need right now is not a lawyer. What you need, if you're choosing, the stronger advocate would be a qualified, seasoned public insurance adjuster. Now, I have lawyers on staff here, and I tell them, you stay out of the adjusting. You read contracts, review contracts. A good firm will build. What we do is everything's about documentation. So a good public adjuster, and there aren't that many out there, unfortunately, but a good public adjuster will build a file, build a case, have a clear intention, have a clear vision of where the claim should be, and start building that with documentation, providing the insurance company with the information they need to pay the claim, giving them an opportunity to do what they're required to do. And there are fair, you should all look this up, there are fair claims regulations that insurance companies are required to abide by, which govern how they are to handle first-party claims like this. And that includes being responsive to all written communications within 15 days. So if we see the carrier is not behaving appropriately, and we send a letter to them demanding, let's say, direct responses to questions because they're kind of they're not being consistent with their claims handling, they owe you a response, a complete response within 15 days. They also, every 30 days are required, there's a continuing notice requirement. Keep the public informed, keep the consumer, the insured policyholder informed on what the status of their investigation is. So a good public adjuster will get involved in the outset from the beginning and begin documenting the file and collaborating, giving the insurance company, coming from a space of good faith, give them the information they need to quickly pay the claim. So substantiate the numbers, not just throw a number against the wall in hopes that it will stick, but substantiate the numbers. And then by the end of that claim, if we see that the insurance company is not behaving, has violated those fair claims regulations, is not coming, there's something called the implied covenant of good faith and fair dealing. They're supposed to come out with that positive attitude, look for reasons to pay, not seek reasons to avoid payment or artificially limit the value of the claim. All of those things we document, misstep after misstep after misstep. So if we don't settle the claim, or if it doesn't get fully resolved, and if there is a need for a lawyer to get involved, then at that point, you have a documented file that you can hand, the ammunition, if you will, that you can hand to that lawyer so that that lawyer can either litigate or finish, take that next step to trying to get the claim resolved so that the carrier will, to give the insurance company an opportunity to pay and avoid bad faith dollars on this. Because you'll have a breach of contract claim and then a breach of that implied covenant of good faith and fair dealing, or a fancy phrase for bad faith claim. So a good public adjuster is the best route to go. I'm not suggesting that there are some lawyers out there that profess to be claim professionals. They're not adjusters. their lawyers.
Thank you. That's very helpful. Another one, this is more of a differentiation. Replacement cost policy. Is that the same as an extended cost replacement policy?
So a replacement cost policy is what we talked about earlier. We promised to give you new for old. The extended replacement cost endorsement, or let's say that's an added coverage for that replacement cost policy, that just speaks to the valuation. If the value of the loss exceeds that $1 million example, if the $1 million is your coverage A dwelling limit, if it ends up costing more than $1 million, that endorsement gives you up to a certain percentage, up to a certain amount that they will pay beyond the policy phase. So that extended replacement cost coverage is just an endorsement, an increase, if you will, of your coverage A limit, your policy limit.
Yay.
Thank
Yeah.
you.
Corey, can we ask,
Yeah.
is there a reason not to have the county do your phase 1 scrape at no cost?
You're asking me?
Yes.
Okay. Is there a reason not to have them do the phase 1 scrape? Have they done testing? Or they're
They've,
just-
you know, I have no idea. We just got news today that the county will do your phase 1 scrape at no cost.
Oh, I don't see any reason why not. They let them do the phase 1 scrape and then do the testing. But at least,
Okay.
yeah.
And
Trust but verify.
trust but verify. So do you work with that remediation contractor to make sure that they do what they're supposed to do? Or do you just negotiate money to pay them?
So when you say the remediation contractor, can you be more specific?
So let's just pretend that there is smoke damage. They take it down to the studs. Who makes sure that they've done their work properly?
That's a great question. The same testing lab that set forth that decontamination protocol should come back and do a proper clearance test.
And so we want to negotiate that up front, right?
That should be part of their original, when they estimate or provide their invoice for services or an estimate for services, that is an additional charge that they should be making to come out and do a visual test, and or if appropriate, any surface sampling or air sampling or whatever they deem necessary, so that they have clearance. And remember, part of the reason why you want to bring out these qualified experts is there's liability attached to this. You have a contractor, because too many of these insurance companies are sending these mitigation vendors out. And I'm a licensed contractor, and I used to do remediation work in the 90s. But they come out and they just clean. And then they say, okay, you're clean. Well, there should be testing before cleaning is done, then cleaning, and then post-cleaning testing, that you have something to compare the two. So you have, here's pre-restoration, here's testing for post-restoration. Now, if you ever want to sell your house in the future, and this was in a fire zone, one reasonable question would be, did you hire the appropriate professionals? Because I want to make sure there aren't toxins in this house. Now that testing, both pre-restoration, so you can show, here's the testing before the restoration, here's the cleanup I paid for, here's the post-clearance testing. You have a clean bill of health, your house. So make sure that you do testing before and after.
And, somebody just texted me. So we do testing before and after. When does your job as the public adjuster, when does that end?
When does it end? It ends when we get the claim fully settled and resolved. Now, I have a tendency, my firm, of not going away, even if it's You know, if we literally, we tell people we handle claims like it's our own home. So it's done, our firm, it's done when the claim is 100% settled. But we're always there for our clients if they call after with questions or concerns. We don't get involved with the reconstruction because then we become construction managers. And that's what my studies were in, but that's not what we're doing as public adjusters. But we're always available, but our job technically is finished when the claim is settled.
I'd like to add also, I think it's important to know some public adjusters like to partner with contractors. We don't do that because we feel it's a conflict of interest. Our job is to settle the claim, get you your money, and then you take that money and you decide how you want to repair your home, if you want to repair your home. And we're not going to push any contractor on you. Some of these contractors work with public adjusters and they have some arrangement. We don't do any of that. We feel that's the best way of doing things.
I appreciate that. Corey,
That's
what other
good.
questions do you have?
Yeah, I have a couple more here in the chat. That's a good segue. There's some folks asking questions along the lines of, let's say your policy has 700 grand to cover your house, but you mentioned something like for like, if they want to build a bigger house, if they want to build a smaller house, if they want to build a duplex, all these things, if they want to spend more money than is in the policy, how does that play out? How flexible are things as they decide to move forward?
Oh, yeah. So in that scenario, they're rebuilding on the same property, right?
Yes.
No. Okay.
Yes.
Remember, it's your property. You can build whatever you want. An insurance company cannot and should not be dictating what you build or what you not build. This would be the appropriate time, right, to remodel. Maybe you want to put a larger home on the property. That's all fine. It's yours to do. With that said, to the extent there is any recoverable depreciation, we're very sometimes insurance companies are heavy-handed with the depreciation they apply. In the state of California, it's based on not just age, but age and condition. So if your house, let's say you had an original kitchen, but it was in pristine condition, they don't get to just apply depreciation across the board based on its age and its age alone. So it'd be good to the extent you hire a qualified professional like our firm to represent your interest in the claim process. Have a fluid conversation with that person and let them know what your plans are, what you intend on doing, because that could affect the negotiation ultimately with the insurance company and what is done.
Okay.
So, but you can replace it with whatever you. Go ahead.
Hratch, when you were talking about that $1 million replacement policy, and now you're saying like for like. So if that is a 3,000 square foot home and contractors are quoting 1.5 to rebuild it, are you just out of luck?
Until they, as far as the insurance policy itself goes, the short answer is yes. If you don't have enough, if you didn't buy enough insurance, going to a loan to the insurance company, that there's only so much money under that's available under the policy that you purchased. That's it for that policy. Now, everything's gray. I don't know. Maybe if the broker or the agent made a mistake and underinsured the property, that there's a potential for an errors and omissions claim against the broker. If it's a captive agent for, let's say, an agent that only writes for that company, there could be an errors and omissions issue there where you can any increase that one in your example, that $500,000 increase, that if they grossly undervalued your policy, that could be an avenue. We don't know yet, depending on sometimes, like we had with the Northern California fires years ago, there could be a viable responsible party. I don't know, utility company, let's say, that ends up being the reason, the cause, the negligent party in this. There could be other avenues of recovery there. There could be avenues of recovery through FEMA if the FEMA steps in. So it's too soon to tell now, but strictly the policy, it's what you ultimately have is under that policy is that dollar amount.
Thank you.
And as a PA, I just want to clarify, there's some questions around this. Can you also help folks if they need, like, they have 12 months, but they need 24 months, or if their rental coverage is 2K, but there's nothing to rent for 2K and they need 3K a month? Are these more personal things a place where a public adjuster can aid?
Well, certainly. I mean, as far as the dollar amounts go, I think everyone's going to see a huge increase with rental, the cost to rent a property, supply and demand right now. A public adjuster can provide guidance for that. Short answer is sure.
Great. Few people have recently moved into their homes within the next 6 months. It's all, it's pretty much brand new. Someone noted that their insurance person came and took photos inside their home. Are they able to, do you happen to know, can they get those photos back? This person had to leave. She couldn't take her own photos. Like, if her insurance agency has photos of the interior of her home, she has a right to those as well?
Yeah, so that's a great question. I mean, that's the underwriting file. Okay, so you can make a request, you can make a demand for the underwriting file. If the carrier, what are they going to argue? They don't want to produce that file. Well, then she knows what she had, and her claim should reflect it accordingly, and she should take a very hard position. I don't like when the carriers do this. It's that transparency I talked about. When you approach the claim with truth, 100% truth, I expect the same transparency from the insurance company. And if they're not willing to do that, then if I were her, I'd just take a hardline position of what she knows and that the evidence is there, insurance company, whoever that insurance company may be. So you already have all the information you need to pay my claim. You don't want to give it to me, that's fine. I know what you have. And then you can always, and then that starts documenting. That is very important, because now you're starting to keep a diary on all your claims from day one. I would, everyone has an iPhone. Most people have an iPhone, right? I would use that memo, the recording memo on there as every activity in connection with the claim, whether it's what you may consider a relatively benign phone call. Keep a record. If you listen to mine, it'll bore you to death, but it's like the name of the file, right? Insurance claim, homeowner insurance claim. Today's date is January 13, 2025, 3:57 p.m. Call to Teresa Fuller. She said this, I said that. She promised this, I promised that. Boom. Keep it. This way, when someone comes to me after, we're doing one right now, it's a three-year-old ordeal, and it was a hot mess, but what they brought to me was a timeline document. It gives me a flavor of the history of this matter. And he or she who is best documented wins in this game. So keep good records.
And I would add, if they're recording a call, you record the call and let them know that you're recording.
That's
and
right.
now on the iPhone, at least I don't know if this is on Android as well, but you can record calls on the iPhone now. In the top left corner, there's a little recording icon. You just push that. If you hear the message, this call is being recorded, you push that button too and let them know I'm recording as well. This way you have a record of what is in the recorded conversation.
And I don't want to suggest that there aren't good people that work for insurance companies. There are good people that are employed with the carriers that truly want to help. Not trying to make, if you look again on our website, we don't vilify the insurance companies. We help them when we can. We challenge them when we must. Okay, we do that. But there are good people that work there too. A lot of them, sometimes their hands are tied. You see what State Farm has done, which is mind-boggling to me, because my firm was built under the same old State Farm from the 90s. It is what it is. That's not who they are anymore to me, in my opinion, in my experience. But anyway, there are good people, so I'm not trying to vilify anyone.
Can you please describe your fees?
Yeah, so our fees are on a case-by-case basis. If we're involved from the very outset, if it's a total loss fire, what we are charging now is 10% of any monies we're able to get from the insurance company or settle for, if we're involved from the very outset again. But if you're dealing with smoke and you're dealing with more complex claims, then it's on a case-by-case basis. It depends on the timing of our involvement in the claim, who the carrier is, what is the extent of testing or investigation that's going to be required, where is the housing situation. So it's on a case-by-case basis, but we do a very good job of looking at each and every independent case and determining, okay, what is going to be reasonable, because we want our clients to have all they need at the end of the day to restore their homes. So it's case by case, other than if we're involved from the outset. Now, if we look at your policy and we look at your loss, even from the outset, and we feel that you're grossly underinsured, we're going to tell you don't hire anyone. Give the insurance guy, go with that option that we talked about at the outset of this call, is let them pay you what they think they owe you. And then I got off the phone with a longtime client of ours. They own real estate. Her house in Malibu was burned to the ground, but she had a $500,000 policy. She wanted us to handle the claim. I said, they're going to pay you policy limits. We're not handling your claim. Has a $1.3 million policy on an 8-unit building. That too seems grossly underinsured. I told her, give the insurance company an opportunity first, then come to me. And then her primary residence in Pasadena, she had heavy smoke damage. That one we will get involved with. My point is, we look at each case and we make a determination of what we feel is in the best interest of the respective policyholder. People remember, I say this all the time, you'll remember me more if I'm the guy that just helped and didn't charge you anything. I'm good with that because I believe in planting seeds and it comes back tenfold. That's just, and for full disclosure, Armen is my son and he works with the firm, and that's how I raise them too. It's like, take care of people.
Is there, are there situations where the amount of the insurance was suggested by the broker or by the company, and you're able to go back and say, well, gosh, this is 100% not enough?
There are, but after the fires years ago, there was this slips my mind which fire. I think it was the San Francisco ones where everyone, and Big Bear, where everyone was underinsured. There were a lot of lawsuits. And so with underwriting, a lot of these carriers ended up having the policyholder sign some form of a validation that they have looked into this and that they accept it. So you have to look at your policy application.
Got it.
So it's case by case.
Well, gosh, go
a
ahead,
couple-
Corey. I was
one
going to
really-
say we're out of time, but go ahead.
A little quick one, if you don't mind. Is there any sort of general timeline if you are in a smoke situation in your personal residence, from your experience? Is that, how much time can folks expect to go through the testing and the remediation? I know it might depend on how
Sure.
an issue there is.
Sure. So first thing, get an environmental company out there as quickly as possible to test. And you can also get a qualified, if you were to hire someone like our firm, we go in there and we want to document everything. Do like a Matterport, some sort of a document. We want to get a snapshot of the evidence that's there day one. Because certain carriers like the Fair Plan, and this is terrible, but the way that they have been adjusting these wildfire losses recently, if you can't physically see the ash and soot, and you have a strong odor, but you can't see the ash and soot, they take the position that they don't owe you anything. It's ridiculous. So documenting the evidence is crucial. That if you have smoke residue in your home, if it's a home, that's what we're talking about today is homeowners claims, because we do farms, we do industrial, commercial, but homes. Document it and get an environmental testing done ASAP. Thereafter, you can have a cleaning done, because if you want to move you back into the property as soon as possible.
Okay. That sounds kind of like a couple of months-ish different. I'm sure it's a different conundrum for some folks, pending if their house is the only house on the street. The other homes around them will be becoming whatever their future is going to be. So I think there's some concern, like, can I live in my home if they're still detoxifying a home next door even?
Fair. I mean, this is why it's important to engage the appropriate environmental expert.
Yes,
If
great.
some people have asthma, have other, issues like medical issues like that, is go see a healthcare provider. And if, in fact, that's their recommendation, you have an allergist and their recommendation is that you not live there, because you're going to have a lot of construction dust, you're going to have noise. It was a nightmare for that one client. On one hand, they were so appreciative that their house didn't burn down. They felt like, they were lucky, and it was a very long disputed process. Ultimately, it got resolved, but it was tough.
I suppose I'm sure everybody has a lot more questions. Teresa, what's the best way to do this? If people have questions that pertain to their individual situations, we're happy to help everybody here and get them on the right path. What's the best way to get in contact?
I think we just post we post your information in the chat. People are asking for that.
Sure.
And are you happy with us doing that?
Absolutely. Absolutely.
And Corey, did you just do that just now?
Yeah, I posted your Linktree, so we'll be posting the recording of this in Linktree. You can get that either through Teresa's Instagram or in the link in the chat. I'll just have to upload the recording, and then I'll also include the adjusters, everyone's information there, but I also dropped the link in the chat here as well. And there's
sorry.
I want to add one more thing in terms of the lawyer versus public adjuster example. And this is interesting. Again, my firm specializes in a lot of complex claims. We deal with lawyers all the time, and we have a whole team over here, a building full, in fact. The benefit of another benefit of being a public adjuster versus a lawyer, sometimes if the claim gets to a certain level of dispute. The insurance, if you lawyer up, the insurance company can lawyer up. And if they lawyer up, you're not dealing with a claims agent anymore. All you have is lawyer has to deal with a lawyer. When we get involved in a claim, if we know enough of these lawyers now that work for insurance companies, some are good, some are not so good, because there are a lot of great attorneys out there. Again, I'm not bashing the profession. I love a good lawyer, but because we're not lawyers, if the insurance company elects to retain an attorney, they're free to do so. But we are a designated agent for the insured. You as the insured or your designated agent is under zero obligation to deal with a lawyer on the other side. So a lot of times, if they're resolution oriented, great. But a lot of times the insurance claims office is like, great, we don't have to deal with this claim anymore. Just kick it, punt it over to the lawyer. And then some attorneys will drag things out. Why? Because they don't have an investment to settle quick. So, and then you're talking a different language with the lawyer, because lawyers don't know adjusting or construction or engineering, or so it just can end up just being a very arduous and unproductive process.
Got you.
All right.
I shared my direct contact info. Our website has our toll-free main line, but if you want to reach me directly, I put my number and my email there, and I'm happy to continue answering questions for anybody that has specific questions. And thank you so much, Teresa, for putting this together for everybody.
Oh, I mean, I just think you guys really have, I live in Altadena as well. I have a lot of comfort and a lot more information than I had. And just thank you both so much. And Armen, you were so gracious when I initially called. I mean, you didn't hesitate. So thank you both. I know your time is valuable. I bet you'll both have 20 messages during this time. So I just want to really sincerely say thank you.
Of course.
Our pleasure, and we wish all of you luck, and we're here if you need us. Okay.